We're all in territory we've never seen before. Since the great financial crisis hit in 2008, the U.S. government has intervened in the economy in unheard of ways, with the Federal Reserve keeping interest rates near zero while buying up bonds in the hundreds of billions of dollars, as Fed Chair Jay Powell defended once again just last month.
We continue to expect that it will be appropriate to maintain the current 0 to 1/4% target range for the federal funds rate.
And according to ECB President Christine Lagarde, Europe isn't far behind when it comes to monetary support for the economy.
We're not out of the wood yet, and we have to continue to show resilience, persistence, and continued cooperation.
But monetary support isn't the half of it. Governments have now stepped up with trillions of dollars in fiscal support and are considering trillions more, which former U.S. Treasury Secretary Mnuchin says is concerning.
I think, to the extent that some of these other programs get passed, will be up to 32, 33 trillion. I think 140% debt to GDP is a very dangerous issue.
So what are the effects of all this? Frankly, no one is quite sure, with some more than worried about inflation like Larry Summers.
I do think we're in very serious danger of repeating almost all the mistakes of the 1960s and early 1970s.
And BlackRock's Larry Fink this week agreed that it isn't all transitory.
Do I see persistence in inflation? Yes. I believe it's more than transitory related to supply chain issues and commodity prices.
While at the same time, we still have unemployment at levels we shouldn't have expected, leaving investors looking for a roadmap when it's a road no one's ever taken before. Or, as Chair Powell admitted to Senator Kennedy in February, all that we learned in economics doesn't necessarily work anymore.
When you and I studied economics a million years ago, M2 and monetary aggregates generally seem to have a relationship to economic growth. Right now, I would say the growth of M2, which is quite substantial, doesn't really have important implications for the economic outlook.